Hello stock stalkers, welcome back to the channel. Today's video will be very interesting as I'm about to share a strategy that is 100% free and very easy to use. If you are a beginner and passionate about trading and wondering where to start and which strategy to use, this video is for you. But at the same time, let me tell you, no strategy is foolproof. Any strategy that you implement should be followed by a strong risk management. Yes, with this strategy, you can get a hands-on experience of the market and slowly move to advanced stages. Of course, you can use this strategy in any market, may it be crypto, stocks, forex, gold, silver or anything that you would like to trade. Now without wasting any time, let's dive into this video. Okay, so this is the daily chart of Emaar Properties from Dubai Financial Market. We will try and implement our strategy on this stock. To use this strategy, we have to use an indicator. It's a very common indicator and very known as well. It's called Bollinger Bands. Now, if you're using TradingView as your charting platform, all you have to do is go to this tab, Indicators, click here and look for Bollinger Bands, Bollinger. The moment you type this, you will see Bollinger Bands appearing right at the top. As you can see, this is starred. It means it's in my favorites list. I click here, I close this window, and now you can see the Bollinger Bands is plotted on my chart. Now we will understand how to use it. I will not make it difficult. We do not want to understand how it's calculated and what's the math behind it. All you have to understand is this is the upper band that acts as a resistance. What is resistance? It means where price goes and it gets rejected and then it comes down. This is the lower band. This is acting like a support. What is support? When the price hits this lower bands, most likely you will see a bounce from here. It means lower band is protecting the price from any further fall. And this orange line that you are seeing is 20-day simple moving average. This also acts as a support and resistance. To give you an example, when you see price crossing this 20-day simple moving average, you can expect a momentum to the upside. When you see price breaking this 20-day simple moving average to the downside, you can expect price to go down. Now, the very important part is the mouth of this band. Let me remove the drawing and show you where the mouth is. Here we can see the mouth of this indicator. This is the upper band and this is the lower band. Okay, so whenever you see a squeeze here, this is a squeeze. Say for example, this is a squeeze. When the bands get narrower and narrower, you will expect a squeeze. If it squeezes to the downside when it crosses the support, this is a good chance to short. And when it gets narrower and narrower, if you see a breakout to the upside, this is a good chance to buy and go long. Let's take some examples. Let me remove the drawing. Here you can see the band getting narrower and narrower right here. And this is the place when we see a breakout. Also, we can see one more criteria here. The orange line that is 20-day simple moving average, we can see price is breaking out to the upside. It means it's crossing this resistance. Now, when it comes back for a retest, and when you see a gap up with a solid green candle, this means it's breaking to the upside. Let me repeat again. Here you can see the mouth of this band is getting narrower and narrower, right? This is very narrow. And when you see price crossing the moving average and then it gaps up, it means market sentiments are positive. Even if you enter here, you can still make profits. Now the mouth of this band is getting bigger and bigger. Can you see? This is the mouth. The mouth is getting bigger and bigger. When the mouth gets bigger, it means market is now volatile and it have made a big move. You will notice that always when the mouth gets bigger, eventually it will calm down. Let me adjust. Now you can see after this big move right here, now the bands are getting narrower and narrower. They are coming closer to each other. Now they will get narrower and eventually market will make a breakout to the downside or to the upside. As of now, you can see price is below this 20-day simple moving average, but see how beautifully it's taking support at this lower band. Green candle right at the support band. Yes, this is another strategy. You can plan your trades. If you want to buy at the support, this is a good support for Emaar on daily chart. But at the same time, you should also understand there is a resistance, that is this 20 simple day moving average. Price may go up and again come down when the mouth of this band will get narrower. So in other words, when the mouth is narrower, it's trying to accumulate the energy, and eventually the energy will be released on either sides. Now let's see what is previous data showing us. Okay, so we can see previously after this big move, let me adjust the chart. Same scenario here, the bands were getting narrower and narrower right here. Again, this solid green candle broke the immediate resistance, that is 200 day simple moving average, and it hit the resistance band, the upper band, and from here market is going up. When is a good time to take the profit? When it hits the support for the first time, support of this 20 simple day moving average. This is the place where you should take your profits. Let's take another example that is of a short position. When you see it's just band walking, what is band walking? It means when the price is just near the upper band, it's called, now the stock is band walking. Okay, in this scenario what we saw is after the bands were widened, it hit the support zone, that is the lower band, and then it tried to cross this 20-day simple moving average. Here it got resisted, and now this is a good chance to short. So now this stock is band walking on the lower side. It means it's going down or bearish. Let's take another example. As I said, the lower band acts as a support and upper band acts as a resistance. We can see market taking support here at the lower band, and now we can see a good bounce from here. Where do you buy? There are two scenarios. Either you want to buy at the support that is near the lower band, or you wait for it to cross 20-day simple moving average, and this should be your buy or your entry. And now you can ride this trend to the upside. Isn't this, guys, too easy to identify when to enter and when to exit? I'll give you more examples. Let's check out Bitcoin now. Okay, so this is the daily chart of Bitcoin. Let's try and implement the same strategy here, and let's tweak it for better results. And if you are serious about trading and want to make regular profits, you can join my technical analysis course where I teach everything from the basic to advanced level. Link is in the description box below. You may get in touch with me. Okay, so what we have to see is a squeeze of the bands. Here we can see the band is getting squeezed. Right here, this is the upper band and this is the lower band where the price is band walking. Now the band is getting narrower and narrower. You can see right here, this is the space as of now and this was the space prior. So as it came towards this zone, we can see it's getting more and more squeezed. It means now it's ready for an explosion. A little tweak will help you out. When you see market is taking bounce from the bands again and again, it means support zone again and again. Let me remove this one so it's a bit clear. When you see it takes a double bounce from the same zone and then it crosses the 20-day simple moving average. This can be added to your confirmation. A little tweak will give you very good results, trust me. So number one, you want to see bounces from the lower band at least 2 times and then let it cross this orange line, that is 20-day simple moving average, and you can see how beautifully the market is going up. It's a very good buying strategy, and where you have to exit, as I told you, once you see a cross below this 20-day simple moving average, immediately exit your positions. This is good profit. Say if you have entered at this level and even if you are exiting here, this is huge profit. Your stop loss is very minimal. This is your stop loss just below the support zone. Let's identify another way. Okay, what we saw here is Bollinger Bands getting narrow and narrow right here. What happens when you see it gets narrower and narrower? It will explode on either side. What we are seeing here is it tested the resistance and it got rejected. This is a bearish candle, that is inverted hammer candle, and this candle crossed the support, that is 20-day simple moving average, exactly opposite of how we were previously looking for buying opportunities. Here we are looking at selling opportunities. So what we want to see is this red candle crossing the immediate support. Once it crosses, this is a good chance of short entry or short selling. Now you can see it's band walking. Correct. Again, it tried to cross, it got resisted. It means this 20-day simple moving average is protecting the price. So it's helping it fall further down. So if you have shorted somewhere here, still you are in a very good profit. Let me give you another example on gold. This is the daily chart of gold. Let's try and implement the same strategy on this chart as well. Guys, if you're learning something out of this video, please support the channel, hit the like button and share it with your friends. Okay, so let's see where are the bands as of now. After this move, market is just going up. Also, we can see bands are moving along with it. But we can see bands are now getting squeezed here. So this is not a squeezed zone. Right here we can see the bands are now very squeezed. So this is the zone where you're looking for a breakout. Now our first criteria is already met. That is, we want to see a squeeze. We see a squeeze here, yes. And the second criteria is we want to see price crossing this orange line, that is 200-day simple moving average. Once you see a candle close below this moving average, you have to start taking short entries or short sell positions, and this is your profit. Your stop loss is very small right here, so you can easily target 1:3 on risk to reward ratio. So this trade was also successful. Let's try another position. Let's see if we get more opportunities. Again, as we know, the band is too wide open. We want to see a squeeze in the band. Here we are seeing mouth is now getting squeezed right here. So this is the place where it's getting squeezed. So our first criteria is already met. That is, we want to see squeeze in the band. We want to see as much squeeze as we can, and then look for the second criteria. Second criteria is that we want to see price crossing this moving average. That is 20-day simple moving average. Once you see this, this is again your shorting opportunity. Short sell here, and this is your profit. Your stop loss is again very small. A favorable trade, at least we can easily target 1:2. Let's go further. We can see market is just moving sideways now, and we are waiting for an opportunity. But the band is getting wider. We don't want to trade when the band is getting wider. We want to trade when the band is getting squeezed. So we see a squeeze here. As I had just mentioned earlier, when you see a bounce near the supporting band, that is right here. This is the first bounce and this is the second bounce near the band. And when it crosses the resistance, that is 20-day simple moving average, this is the place where you have to look for buying opportunity or long positions. This is the place where you enter. Now here is the place that is showing us to exit the trade. Will you exit? Yes, for sure. We have to follow our strategy. Any strategy that you follow is not 100% correct. If you enter here, you will exit at break even. At least it's not a loss. Now if you ask me, will there be losses? 100% sure. Any strategy that you use will give you some losses as well. But the trick to make money is to maintain your risk to reward ratio. Now what happens again is when you enter here and exit here, you are coming out on a break even. You're looking for buying opportunities again. And if you are an aggressive trader, you can again take an entry when you see a cross above this resistance, that is 20-day simple moving average. At the same time, let me highlight, the band is not very squeezed, but we are following the same momentum, so we can expect it will follow the band or band walking. So guys, I hope this strategy was very easy. You can implement this in your trading style. I recommend you try it on demo accounts first and then slowly and steadily move to the live accounts. That's it guys. Thanks for watching and keep stalking.